Hey everybody, welcome back to the channel. Something new here, my name is Jason. I look at everything trading, especially in the prop firm space, so you guys don't have to go and look for all the information yourselves. So what we're seeing at the moment is a slight shift in some of the prop firms, especially with the new ones coming out. They're often what we call a single phase challenge. So in most prop firms we're very familiar with the two phases. So as an example, you need to get 10% in phase 1 over a 30-day period, and in phase 2 you need to get 5% over a 6-day period. And every prop firm has slightly different drawdown rules, but typically you allow a 5% daily drawdown and a max overall drawdown of 10%. And that is slightly shifting away from that model and going into the single phase. So up until now it's generally been the new prop firms looking for new fresh ideas, but recently we've now seen the Funded Trader program actually launch their own single phase as well. So now seeing it come more to the mainstream, the bigger prop firms, the one been established for many years, who have very much stuck to that one proven track record, and now going into something new, whether that's because there's a demand for it and the traders are asking for it, or they're just keeping up with the new guys coming onto the scene. So I'm not going to go into specifics and break down every individual challenge type with each prop firm. More just give my views on why this is good for some traders and why it may not be as good, and potentially some of the pitfalls that you may not see when you first start looking into potentially signing up with any of these challenges. So the first thing to be aware of is a lot of these are now doing it over unlimited time, and I think that's a fantastic advantage. It takes away some of the gambling and the risk, some of the time pressures, and allows people to focus more on individual trades rather than trying to get a percentage target very quickly. So that's definitely a bonus for me going for some of these single stage challenges. But for me, the biggest difference, and what is more noticeable, is the fact that the daily drawdown and max drawdown is typically half of what we're seeing for the two phase. Now, if you think about it, it all comes down to risk management and how we actually focus our days and how we actually manage going into a drawdown. Let's say on a normal challenge we're risking a maximum of 1% per trade. We could quite easily go 3 trades in a day, all get losing trades, but not be anywhere near hitting our max loss. Our next trade could come good and wipe out all of our losses and get us back into a profit for that day. Now what we're seeing with the single phases is they are limiting the daily drawdown to approximately 3%, so almost half of what we're seeing elsewhere. Some of the challenges actually have no daily limit, so if you hit the max loss of 5%, then you're taking out. But for me, it's looking at how we actually have to adjust our risk parameters and risk analysis, and potentially be looking at only risking a maximum of potentially 0.5% per trade. So although we have a extended time period to get there, we have the same phase 10% goal, it really may take a longer amount of time to get there because of the risk management. And again, for me, I think a lot of traders will be slightly blindsided by its single phase, just past one phase and you get funded. But when you actually look at the mechanics, it may take longer and the risk management has to be a lot tighter and a lot better, so you don't hit the significantly reduced daily drawdown and max overall drawdown of between 5 and 6% depending on the prop firm you go with. So for me, it's really looking at the own risk appetite and trading parameters and patterns that you as a trader use if you're deciding to go with a single phase. Now it could be that potentially you get into 1 or 2 trades, hit the target really quickly, and don't have to worry about it. There's no issue about having to do the second phase of the challenge. And as we've seen, often the second phase can be more difficult because you feel euphoric about passing the first and therefore get straight into drawdown because you're trying to rush it. Here I think that if you are more of a methodical trader, more thought-provoking and just sort of looking at the trades very calmly and able to just trade over a period of time, the single stage is definitely a benefit and advantage for going down that route. Especially when you look at the payouts as well, they're pretty much the same when you get funded, around about the 80% mark. So yeah, I don't see there's any disadvantage going for the single phase challenge. And I think once people start signing up and getting more people through those, then other prop firms will have to start looking at this and potentially changing their models as well. And who knows, it could be that they actually potentially do away with the 2-phase challenge. If everyone's going for a single phase and looking at better risk management processes, they can actually get away with a 2-phase and just all go for a single phase. But again, that's me sort of projecting down the line of where prop firms might go. But really they look at the stats, they look at how many people pay for challenges, pass challenges and get funded. And if they can see as a business model, this is more conducive to them potentially making more money and having better traders long term, then definitely prop firms will analyse this and change it and make it better. So yeah, I hope you enjoyed today's video, and it's definitely thought-provoking to see how the prop firms are changing, especially listening to what traders and the new firms coming on board challenge the status quo of the big guys. So as always, catch you again soon. Cheers everyone.